We start with our headline, new possibilities for banking in Nigeria. Now, Nigeria's banking sector has evolved over the years and the evolution is continuing. New ideas and policies are throwing up new possibilities. We're focusing on two of such policies. We'll look at what open banking is and gold for collateral and what these two could mean for Nigeria's banking system. I'm Tolulope, Adeleru-Balogun. Welcome. This is Business Edge. Nigeria's Minister of Mines and Steel Development, Olumuyiwa, said recently that the government plans to ease access to credit for small and medium businesses. How will this be done? By making deposit money banks collect gold as collateral for loans. Adegbites said that plans are being made to affect the exchange of gold for loans as soon as possible. He stated that Nigerian banks and his ministry have started discussions on the initiative. The idea is that lenders will offer small and medium enterprises certificates that value the gold received. This certificate will then be used by the business owner to apply for a loan. Another policy that could equally ease financial inclusion and boost banking is open banking. Open banking is basically a term that is used to describe the use of open technology by third-party providers to build services and applications around financial institutions. It provides guidance on how these third parties can access and utilize customer bank data in a standard format to provide more open, transparent, and competitive banking services. Joining me on the show is the co-founder and CEO of Blackcopper, one of the fintech firms here in Nigeria, Olumuyiwa Faulkner. Muyiwa, welcome to Business Edge. Thank you so much for joining us.
Thank you so much for having me.
So let's start with the Minister of Mines and Steel Development's new initiative, which seems to have really advanced, given the fact that he's in some kind of conversation with financial institutions. And he wants to basically use gold as a method of collecting collateral. And gold has been used as a method of trade for centuries. We've seen that. But when you heard about this initiative, what were your initial thoughts?
So my initial reaction was, I laughed. I was like, okay, that's interesting. Gold has been here for ages. Why now? First things first, people need to understand what a collateral is. You need to think about it from the fact that a collateral is essentially you pledging an asset to secure a loan. So which means that going forward, they're now beginning to think of gold as an asset. It always has been and it always will be. And what is important is this has been done in several markets in the world. Up until 2015, the London Builders Association, Miners Association, they used to have like rates for gold leasing and also for gold forward rates. And the good thing about gold being is you're able to always identify whether you will be able to make more in the future or you'll be able to make less. And that enables essentially being able to use gold as a collateral for a loan. It is very possible, but essentially you have to then build an entire framework around it. It's not just oh, I have gold, I have a certificate, I can get a loan. There has to be a process, and it has to be a very transparent process. It has to be one and the same across. So if I go to bank A, I will get the rates that I get at bank B simply because the value of the gold does not change even though I'm going from bank A to bank B. So when we think about it more like that, then there might be a chance. It's workable, if you ask me. It's very workable, but it's a long shot.
Okay, so it's workable, but it's a long shot. And you, of course, did speak about the fact that this has been in existence in other economies since. Is there anything that they've done that they've noticed is a challenge that we can sort of hop, skip over so that we don't face the same issues if we were to take off with this?
I think that we need to understand that the world is becoming more digital and we don't want to be pulling ourselves back to processes that are manual. Because what this means is I have to physically go somewhere to get a gold bar or put a gold bar somewhere and get a certificate, then go to the bank. The world is already a global village. The mobile internet penetration has changed everything. What we need to do is find a way to digitally offer loans. And again, when you talk about small businesses and you talk about gold in the same breath, I'm sorry, they don't jive.
It doesn't match.
It doesn't, because the truth is, as a small business, you might not be able to afford gold.
Yeah.
Gold is not cheap. I mean, averagely, it costs about $1,000 for an actual gram. So $1,000 in today's Nigeria is almost 500,000 naira. So if at 500,000 naira, how many people can actually afford to have that type of gold and then want to use it in exchange for a loan?
So there are questions, and that's a question I have further down, because I think there are a lot of details sort of missing from what the governor, what the minister has said. But let's also expand this, because this is about loans and collateral.
Absolutely.
And it's a massive conversation in Nigeria, and there have been criticisms. Banks have not been giving loans. Small and medium scale businesses are struggling. But the fintechs have come in. Fintechs like yourself, Blackcopper, have stepped into this space to enable these entrepreneurs to get loans. What have been the biggest complaints you've heard from Nigerians when it comes to accessing loans for their businesses?
I mean, so it's always been the fact that, I mean, you can't blame the big banks as well, because when you do not have enough data to make a lending decision about someone,
recovery becomes an issue.
Recovery is an issue, right? And for the big banks as well, in Nigeria today, the big banks have had more alternate ways of making money, easier money than lending. I mean, SMS alerts from back in the days, annual maintenance on cards, annual maintenance on accounts, all of these things. These guys can make easier money, cheaper money, than essentially carrying the risk of lending to a small business that you might never see again. Now, any economy that does not have a healthy credit system cannot grow. Any economy that does not have a vibrant small business segment cannot grow as well. So for us to continue to drive this economy in the right direction, the credit system has to be healthy. And to make the credit system healthy, we're not talking about the credit that you go and get when you walk into a bank. We're talking about those of us that are here offering alternate ways to give them credit, giving them instant credit, giving them instant loans. There has to be a system where people do not begin to loan stack. So you don't come and have a loan with me, have a loan with B, have a loan with C, have a loan with D, and then
nobody gets their money back.
Exactly,
and
because
then it
there
becomes
is
a
no
problem
system
for the next customer.
Because there's no system for me to know, because I'm not a bank. They don't care about me because I'm not a bank, but they forget that we launched in September. We've already done over $1 million. We have well over 50,000 customers. Nobody still cares because, well, you're not a licensed bank. However, we're a licensed money lending operator. And the most beautiful thing about lending is what essentially drives the economy. It's what makes people to be able to move around. Money moves from me to the buyer or to the seller. The seller takes the money to another person to buy his stock, and the circle continues to grow, and then the economy grows. But if we do not create that healthy credit system, then we're not ready.
Okay, so a lot of things have been raised, and I think there's going to have to be a part two of this particular conversation, increasing or raising a healthy credit system here on the continent, particularly in Nigeria as well, making sure that the money is able to flow from point A to point B to point C, but also making sure people are able to recover their loans. And on a side note, very quickly, I want to ask, if somebody can just pick up their phone and send you a message and ask for a loan and get a loan, how are you sure you're able to recover your loan as well?
Excellent question. The Nigeria of today, there is BVN. Now there's also NIN. Some of the things that the government and CBN and NIBS are all trying to do is to ensure that people like us who do this business continue to get our money back so that we continue to be in business.
Okay.
Now, when you have a BVN, you're not supposed to have more than one. Right? With the BVN, we can also see all the accounts that are tied to the BVN, courtesy of our partners and the NIBS, right? That makes our life easier, makes recovery easier. Now, with NIN beginning to go in line with your mobile number, what also then happens is you don't get to change your mobile number often. So if you don't get to change your mobile number often, we would also be able to track you because you have just one number, you have one NIN, you have one BVN. By the time we circle in on all of these things, considering that you've also downloaded the app, you've given us access to your location, we would also be able to eventually get to you. The problem with lending and recovery isn't, it's not really about recovery. It's about willingness to pay. And the number one reason why people repay loans is because they want to take another one.
Usually a larger loan.
Exactly. Okay. So long as you make it easy for them to repay and they can get a higher loan, then you'll be able to do the business and your recovery will be much better. Okay,
it's an interesting sidebar we had there. But let's get back to this initiative. And there seems to be a few details missing. So once I give my gold value, the bank will issue me a certificate for the value of the gold. I can then use the certificate at the same bank or take it to another bank to get a loan.
Absolutely.
Do you think the banks themselves will be on board? What about the storage of the gold? Even though gold has been at some of the highest rates it's been in a decade or so, what about price fluctuations? You mentioned, of course, the same one bank giving you this price and being sure that you go to another and you're able to get the same price. What questions do you have that we just do not have the I's dotted and T's crossed so far with information available?
Yet. I mean, so with this type of initiative, it's essentially going to force everyone to sort of realign the way they do their business. Take, for example, a bank whose vault does not carry gold today, or they have to create a new structure internally, a new process for verification. I mean, they're not gold experts, for example. So they have to find a way to verify your gold when you bring it.
Exactly.
They have to find a process to create, initiate, and approve your certificates. And then there has to be some sort of unifying factor across the banks to know that, oh, this certificate is original, it's from this bank, and it works across everybody. Now, so all of this minutiae makes it a bit, it's not a one size fits all. It's not something that would happen tomorrow, but I think that gradually, if they start it, we definitely will get somewhere with it. I mean, I really hope that it is something that we can explore. I mean, just considering the fact that gold forward rates are always usually great, because I mean, gold is at its best price almost ever at this point in time. And it presents an opportunity for everyone who has one. But whether or not it will solve the problem of SME lending, I absolutely doubt that.
And I think that sort of makes it seem like there are two separate issues in this conversation.
Because the understanding of SME lending, according to the minister, is not the same as what SME lending is on the streets.
That's interesting. So we've seen the CBN attempt to force deposit money banks to give out more loans with a minimum loan to deposit ratio policy that it's been enforcing. However, there are also criticisms of that policy, as some say it may encourage weaker risk management practices. And this is now a new initiative coming from outside of the banking system. So you've sort of basically answered this question in terms of saying you think it's a workable solution or a workable process anyway, not necessarily a solution to SME lending. That it's a possibility. So do you think the public now, on the flip side, do you think the public would be on board with this? We're so used to burying things in the backyard under our pillows. Am I going to take my mother's gold that she's been keeping for 2 generations and take it to a bank?
So there's always a part of education as well, right? You need to always tell people about it. You need to let them know. You need to explain it in plain terms, understanding that you're not necessarily giving the bank your gold. You're essentially swapping it for a future price. You're saying, oh, I have this gold. I need the money now. Hold the gold, and when I return your money at so rate, you will give me back my gold. Or there's also the gold leasing. Oh, I want to lease gold, and then the bank says, okay, this madam has brought her gold today. You can lease it at this rate. The bank can also make more money as well from gold leasing, but I don't think that gold leasing is going to be a really big thing in Nigeria. More around actual go forward rates. But eventually, the regulation drives adoption in Nigeria. So if there is proper regulation and frameworks around it, and the banks are bent on pushing it, eventually people will get around to it.
Okay. This is the point where we take a break. But whether it is gold for loans or open banking, Nigeria has been on a financial inclusion drive for some years now. Hold on to these numbers, 80% and 40 million. I'll tell you what they mean after this break. Now, from gold for loans, we move the conversation to open banking. Open banking is basically a financial services term as part of financial technology that refers to the use of open APIs that enable third-party developers to build applications and services around a financial institution. It should ensure greater financial transparency, options for account holders, also ranging from open data to private data. So Olumuyiwa, in terms of the Nigerian context, and we're hearing now about open banking drive, financial inclusion drive, all of it's under what the CBN has been trying to do. What does that mean in the Nigerian context, open banking?
So open banking essentially means I want to be able to use my historical data with a particular bank on a non-banking solution or on another financial institution. So I want to be able to go to Bank A and say to them, I have an account with Bank B. You can check it out. and I have been doing business with them for 5 years, but I need a service that only Bank A is offering.
Okay.
And Bank A can get an API that they just call and they see my details. Similarly, people like us as Blackcopper, for example, we have partnerships with people like Okra, like Mono, that enables us to be able to spool bank statements. Now, if these guys, if there was open banking as open banking, we might not necessarily have to use a third party. We will just go directly to the bank and get their APIs and say, okay, we want to get APIs for people to be able to get their statements, APIs to be able to do direct debits, for example, because those are the things that would enable our own business. Because for us, we're in spaces where the bank doesn't want to play, not necessarily want to play. We do a lot more for actual small businesses. And then the guys can say, you know what, with your accounts across these banks, don't worry. All you need to do is authorize us to be able to get access to this information. And when we get that access, that's it. Because the most important part for NDPR is that the Nigerian Data Privacy Regulation requires that you get the person's consent.
Yes.
And that's the most important thing. The moment we get the consent, it's okay. I mean, the guy wants to get a loan. The bank doesn't give him a loan. I want to give him a loan. I'm just going to ask the bank, oh, bank, can you share his information? He just consented. And then he can consent either, maybe by logging into his mobile banking app, or he can consent by maybe signing a form. I mean, but we're fully digital end to end.
Yeah.
That's the future that we're going to. So there's no need to get a paper for anyone to sign anything.
You really want to kick. You really want everybody to be on this digital. All right.
Absolutely.
So I gave you some numbers before the break, so let's get into that. So the CBN set a target of 2020 to ensure at least 80% of Nigerian adults have access to financial services. Even before the COVID-19 pandemic hit, that was not going to happen. As it stands, Nigeria's financial inclusion rate is about 63.2%, meaning that about 40 million Nigerian adults still lack access. Nigeria's banking and fintech sector has been growing, but despite this, a majority of Nigerian adults fall into the categories of underbanked, unbanked, and financially excluded. Data actually shows that Nigeria is declining in the financial inclusion area. So, Muyiwa, can open banking help us bridge the financial gap? Can it help more people become banked, overbanked? Can we just get the services to the people?
Getting the service to the people isn't the problem. I mean, the USSD platforms, for example, have really helped to bridge that gap between, someone who essentially requires or who is required to have a mobile app, have internet, be tech savvy before you can access banking services. But with USSD, you're able to do these things because you need very little literacy or financial literacy or tech savviness to be able to do it. Now, what we're looking for with financial inclusion is we need to remember that to include someone financially, the person has to have finance. So we're focused on financial inclusion. We're not focused on giving the people finance, on getting them to make money. It is when they have money that they can essentially want to put it in a bank, or when they have more than enough that they want to save it. Now, we need to, which is why lending is very important for small businesses, because you need to enable these guys to be able to make more money. It is when they make more money that they might want to might want to do more financial transactions. So financially, I don't think financial inclusion is a problem. It's just a word that it's a phrase that we've beaten around for so many times this past, decade or something. But the most important thing is, take for example, the average Nigerian is a subsistence farmer. If you live in Lagos, you're not the average Nigerian. If you live in Abuja, if you live in Port Harcourt, you're most likely not the average Nigerian. But if you go into the hinterlands, you will see people. Subsistence farming is I farm to eat.
Oh, and cutlass.
That's what it is. Now, about 60% of Nigerians are subsistence farmers. So where are they going to get the money they want to keep from? What we need to do is enable these subsistence farmers to increase their capacity and say, oh, today you plant 10 rows and 10 tubers of yam. How do we increase it for you from 10 to 50, such that when you eat 5, you're able to go to the market and sell the remaining 45. Create good road network, create a quality control system where there's somebody who is able to store and secure all of these things, and then say to the guy, oh, okay, now that I see that you're making some money, it is time to keep some of this money. Now, to help you keep some of this money, you can use this product. To help you insure your product, you can use this. Now, you can even now go from 50 to 100 because we'll offer you a small loan because you've done this over 2-3 times, and say, you know what, get this loan, and it enables you expand your production. But if you're not enabling actual economic development by improving their financial status, there's no way that financial inclusion is going to work. For the financial inclusion noise that we've heard, the two biggest products that everybody uses is cash in and cash out. So essentially, people just want access to their money. Now, and only people who have money want access to it.
If I don't have money, what access am I
looking for? Exactly.
Okay, so Muyiwa, I think we're just really getting into this conversation because you've thrown up the fact that you think the financial inclusion terminology is just a terminology that we're throwing around. So I'm going to pause us here, but before I do that, I want to leave some numbers because I think in these conversations, numbers are important.
Absolutely.
22 commercial banks, 902 microfinance banks, and a number of other financial institutions like Muyiwa's Blackcopper. But more importantly, 6 in 10 Nigerians, that's 60% of Nigerians, live below the poverty line. You also have 3 in 100 adults, 3%, having mobile money bank accounts. You have nearly 3 in 10 adults, that's just 29% of Nigerians who have bank accounts. And when you finally get down to it, you realize that after Nigeria signed the Maya Declaration in 2012, we have not made the progress that we need. But the conversation will continue. Olumuyiwa Faulkner, co-founder and CEO of Blackcopper, thank you for joining me on Business Edge.
Thank you so much for having me.
All right, so we're going to wrap things up as we always do. And that, of course, is NC4 to watch with a few stories we are keeping our eyes on. AFI has signed a memorandum of understanding with the DR Congo's National Investment Promotion Agency in the field of industrial zone development. Now, under this agreement, AFI will make its expertise available for the development of industrial zones in undeveloped sites in Congo through their delineation, the realization of studies, and the presentation of projects in the land field. The African Development Bank President, Dr. Akinwumi Adesina, has said that Africa needs debt relief, debt restructuring, and debt sustainability. Adesina, who was speaking at the UN meeting on international debt architecture and liquidity, said it is time to put in place an African financial stability mechanism to protect itself against external shocks. He said the mechanism will provide a much-needed financial safety net for African economies. Nigeria has released 5 billion naira for the aviation sector from the 27 billion naira intervention fund promised the sector. 4 billion of that went to about 18 scheduled and non-scheduled local carriers in order to cushion the effects of the pandemic. Aviation service providers got about 1 billion. Now, following complaints, the House of Representatives Committee on Aviation has pledged to look into the matter. And finally, flights around Kenya will experience some bumps this Easter. Kenya Airways has suspended new frequencies that it had planned during the Easter holiday between Nairobi, Kisumu, Eldoret, and the coastal town of Mombasa and Entebbe in Uganda. This is because of the directive issued by the government regarding cessation of movement within Kenya. Kenya Airways flights to Mombasa, Kisumu, and Eldoret will be suspended effective March 29th noon until April the 9th, 2021. And that's this edition of Business Edge for you. Don't forget, if you've missed any of our business savvy conversations on financial and business issues on the continent, head to our website and also to our YouTube page. Until next time, I'm Tolulope, Adeleru-Balogun. Do have a good one.